So I can tell you like 2 or 3 really quick tips on making sure you've got the right amount of insurance coverage, or you've got the right insurance coverage for your multifamily properties. This I've learned over the years, and I thought I had this down really well, because I mean, I've been doing this a long time. I've dealt with insurance companies for years. You know, I have a claim, an insurance claim, probably once, twice a year for something. So, you know, I think I've got a lot of experience with it, but, you know, some recent events have really taught me quite a bit more than what I thought I knew. And, you know, just when you think you've got a pretty good idea about lots of things, something new comes in that just kind of throws you. So, so here's what I'll tell you you need to be thinking about in terms of insurance for your multifamily properties. And if you're active, if you're an active owner investor, this is of course important information. Even if you're passive, by the way, you know, asking the questions about what kinds of insurance coverage is a big deal. You should be asking it. You should be asking it, because there's kinds of coverage you don't want to have. You don't want to have. So let's talk about the kind of coverage you do. First of all, you want what's called replacement cost coverage, replacement cost. So you want basically replacement cost insurance. You don't want what's called actual cash value insurance. So replacement cost is, and I won't get into the weeds totally on this, but just to give you a general idea, replacement cost is basically, it'll pay for the property to be rebuilt, reconstructed, redone back to new condition, at least its original condition to new condition. Okay, so if we have a grease fire in apartment 7 and it's going to cost $35,000 to rebuild apartment 7, insurance replacement cost coverage, it pays you the $35,000 to rebuild apartment 7, less any deductible that you have. And I'll talk about deductibles in a second. Okay, less any deductible. Okay, building blows down. You've got $1 million worth of coverage. It's going to cost $1 million to rebuild the building. That's replacement cost coverage. Rebuilds everything, less any deductible that you've got. Actual cash value depreciates the property first, then pays. So back to our example with the apartment that had the grease fire. If it's going to cost $30,000 to fix that and repair that, actual cash value insurance basically says, okay, wait a minute. It costs 30 grand to fix this, but we're going to back out some depreciation based on age of property, age of unit, age of appliances. So we're going to back some depreciation out of it. We're going to cut you a check for $13,000. Okay. Well, it cost me $30,000, but yeah, but we're paying actual cash value, which takes into account depreciation. We're only going to pay $13,000. Now, not surprisingly, the premiums for replacement cost coverage are much higher than the premiums for actual cash value coverage. Okay, and what you'll find once in a while is people will sometimes unknowingly look for and shop for that low premium without having an idea, a good idea, what they're getting into with that actual cash value coverage, which will only cover a percentage of the damages versus all of the damages. Okay, so we could get into the weeds and go into detail about both of those things, where there could be, yeah, buts or exceptions, but just in general, you want replacement cost, not actual cash value. Okay, so that's number one. Number two, you need to go with as high of a deductible as you feel comfortable going with. Okay, so, you know, when you buy insurance, you're really betting. You're betting whether something's going to happen to your property or not. Okay, so based on where you're at financially with your company, with your property, with what you have, does it make sense? Are you okay with a $25,000 deductible? Or should it be a $5,000 deductible? Or should it be $2,500? Now, at first, the thought is, well, you should go with as low a deductible as possible. Well, that might not be the right answer, because again, we're making a bet here on damages to a particular property. And so am I really going to be that much ahead by paying more in premium for a smaller deductible is what it comes down to. In a lot of cases, you're not. You're not. So am I saying you get as large of a deductible as possible? No. Am I saying you want to get as small of a deductible as possible? No. What I am saying is you want to go through the exercise and not automatically, oh, what's the smallest? Okay, I'll take that. Or what's the largest? I'll take that. Go through the math, go through the exercise, compare premium prices, and make a decision what you feel comfortable with. So with some of our properties, we've got anywhere from $2,500 to $5,000 to $25,000 deductibles. Now, a lot of those deductibles too, okay, are governed by size of property. So our $25,000 deductible is on a 140 unit property. Okay? Our $5,000 deductible is on a 16 unit property. You follow me? Our $1,500 deductible, if we've got that, is on a 4 unit property. Okay? Make sense? But you don't want to automatically go to one or the other. You want to be living with a deductible that you feel comfortable with, okay? Where if there was a loss, yeah, you could handle paying that deductible to get the property back to where it needs to be. You wouldn't like to, you wouldn't want to, but you could do it. That's kind of where you want to be, okay? All right, so that's number 2. Number 3. Dealing with insurance companies, here's a couple of things you need to know. And I'm talking about insurance companies, not insurance agents, okay? So remember, insurance companies have no financial incentive to pay you as quickly as possible for any damages. They have no financial incentive. They've got a customer service incentive to do it, right? But they have no financial incentive. So we've had claims where we've gone up to 3 months before we've been paid. 3 months after the damage was done, after a claim has been turned in. I shouldn't say 3 months, that's not accurate. The longest we've had is 2 months. And some, well, actually between 2 and 3. So I'm talking property damage now. They don't have any reason to get money to you as quickly as possible. So despite what all the commercials tell you, like a good, you fill in the blank, or, you know, any other low voice commercial you hear, you know, you guys know all the insurance commercials. In real life, they're not like that. They're not. Now, I'm not necessarily saying they're bad and they're terrible, and they're not. My experience has been fine with insurance companies so far. But I can tell you, they have no incentive in working fast. So right now, we've got a couple of insurance claims where we've had some units that were damaged from a storm. And when units are damaged, sometimes tenants have to move out. And so we've lost income as a result of that. So there's a, in the policy, we will be paid loss of income if tenants are displaced and we're not receiving that rental income because of the storm. Well, we've gone on 3 months now before we've been paid on our loss of income. 3 months. Should it really take 3 months? No, it shouldn't. How long does it take to calculate how much rent that you're missing from 7 apartment units over 2.5 months? And how long does that take? An hour? 2 hours, maybe? But here we are, you know, going on 3 months. And will we get paid? Yeah. Well, it'll be fine at the end of the day, but again, there's no incentive. So it's going to take longer than you think. So why do I tell you this? I tell you this not only because it takes longer, but from a cash flow, cash management standpoint, you really want to know this. Because it'll enter into the deductible conversation that you have. Okay? It'll enter into the deductible conversation that you have. Because expenses still need to be paid. If you've got employees, they still need to be paid. Everything still needs to be paid, no matter, I mean, I wish the property tax folks, the county treasurer, the city treasurer's office would say, hey, don't pay taxes this quarter. That'd be great. Well, they're not going to do that. They don't care if I got a fire or a storm or something. They don't care. So all that still needs to be paid. And just know that in the event there's issues or problems, there's no incentive in getting you paid as quickly as possible. Okay? All right.